just like the wind blows the wacky, waveable, inflatable arm flailing tube man, we are watching Bitcoin continue along in its consolidation zone. But is the recent movement to the upside a little bit different? We're going to break that down in today's daily analysis. It also seems that countries like Russia, shockingly, are very incentivized to take information away from their citizens that could add to their liberty, banning two major cryptocurrency news websites. We'll also talk about the possibilities of an XRP moon mission, and you'll never guess who's standing up to Craig Wright this time. Well, I mean, you might have guessed. It is kind of all over the internet, but it's going to be a fun one anyways. So let's get started with today's exciting episode of Breaking Bitcoin. Welcome to Breaking Bitcoin, recorded live here in the studio. Of course, it is Tuesday, October 22nd, 2019, foul year of our Lord. Hopefully you guys are doing absolutely fantastic wherever you happen to be tuning in from, and whether you're watching us from across YouTube, Twitch, DLive, Facebook Live, or of course on Roku with the Investor News Channel app. If you want to support the show, make sure to subscribe, follow, share, and engage in the live chat. And if you are watching us on YouTube, hitting the thumbs up is highly appreciated, guys. We've got a fantastic show for you guys today. Of course, today's episode is brought to you by the Premium Trading Group. If you guys are new, experienced, or aspiring traders looking to push your skills to the next level, make sure to join us in the Discord or check out the information in the link in the description to find all that the group can offer for you in your growth as a trader. We've got a fantastic show, as I said, and I don't want to waste any time whatsoever. But first, I must mention that San Francisco Blockchain Week is less than a week away. On Saturday, my toes will be stepping onto the airplane and then shortly thereafter stepping onto the sandy beaches of San Francisco, California. If you guys are interested in coming out and attending the event or meeting up with the Kraken Cryptocurrency team and you have not purchased your tickets yet, there is a link down in the description that will save you 15% off any ticket that you wish to purchase. CESC is sold out, so only tickets to Epicenter are left. So make sure to grab those up while they are still available because, as I said, CESC is sold out. Link in the description, 15% off the ticket to Epicenter if you want to attend. Looking forward to seeing all of you guys down there. I do believe we are going to be doing something on Wednesday for all the Kraken Cryptocurrency community members who are going to be in the area or attending the event. Absolutely excited. We've got a few interviews lined up with some key figures in the space, developers of coins, founders of coin projects, developers in the space, influencers. I'm really excited to get down there and share all that information with you. We're going to be live streaming what we can from the event. We're going to be conducting our interviews, and we're going to be publishing everything in the evenings as well, and probably doing quite a few live streams down there as well. Not only breaking Bitcoin, but also cryptocurrencies and anything we can bring to you. So without further ado, thank you guys so much for watching. Let's get over into the live scene and let's give away some cryptocurrency. And to do that, I want to thank this month's cryptocurrency comment giveaway sponsor, Spectre Security. Make sure to go check them out at spectresecurity.io. Let's get over there. And here we are in the live scene. It does seem like I need to change so that you guys can see my webcam, but we'll do that some other time. We're just going to load a comment right here. And yesterday's video was Bitcoin, massive market movements analyzed, USA traders get squeezed, Bitfinex and Libra updates. Make sure to go check out yesterday's video, 31 comments. I don't feel like I've gotten to it yet, so there probably are some spam comments on there. So let's cross our fingers and hope that we don't get a WhatsApp number. And it is Saintsy, the one, the only, the massive winning streak Saintsy, racking up those wins like a cryptocurrency trader on BitMEX. He says scientific progression and safety. Just remember, the same guy that thought it would be cool to put lead in petrol also introduced the world to the cool idea of putting CFCs in refrigerators. And there we go. We did talk about that quite a bit yesterday. So if you guys are interested in some tinfoil hat exposure, make sure to go check out yesterday's video. And it did carry over into the Discord a little bit. But my good friend, make sure to get a hold of me in the Discord and I will tip you some crypto. Into the live scene. And here we are at the Bitcoin chart. And let me check here, because I saw something roll in, but I don't see it on my screen. Wonder how I... Okay, maybe I just missed something. Max B, thanks so much for the sub, man. And Eli, it's saying you threw in $5 here, but I don't see it anywhere else except for the recent label events. So if you did do that, my good friend, for some reason, it is not coming up on YouTube. But if you did, thank you so much, my good friend. Highly appreciated. If you made a comment, make sure to pop it in the chat because I'm not seeing what went along with your super chat. All right. So here we are on the Bitcoin chart on the daily, as we are prone to do. Honestly, not a whole lot of market activity, not a whole lot of action going on today. It is a fairly wacky, waveable, inflatable, arm flailing tube man day, and we will, of course, break this down a little further by going and looking at the other time frames as well. We're going to go down to the lower time frames here, too, on Bitcoin and kind of look for what I'm watching today. But as far as my trade goes, I'm actually flat on Bitcoin. I used that opportunity yesterday to get out of my trade. Why? Because Minx told me to. So if we look at what we've got going on here, we do have Minx. Minx crossed to the upside on yesterday's daily candle close. That's an early exit signal. We are below the baseline, so we would still be looking for shorts moving forward. Directional bias is to the downside, looking for a breakdown to 7.4K, if not 6.4K by the end of the year, is my fundamental take on Bitcoin's price. But of course, those will not influence when and how I actually put on my positions. Those are just my bias when I look at the market and ultimately at what I'm looking for. I change the look of the studio every day. Yes, sometimes I get bored. So hopefully you guys like the new look a little bit better. I liked, kind of the new setup that I did yesterday. But I do listen to feedback, and people did not like the lights on the monitor. And I also didn't like having the monitor really in the scene so much. And I also did want to move my main computer over to highlight it in the shot as well. So let me know if you guys have any feedback. I am actually, for once, actually kind of happy with the way that the studio looks now. And, being a perfectionist does have its drawbacks at times. Saintsy says his hacks are back and functioning. Texas Blues, good to see you, my good friend. And we have, let's see here. Caprica says, hey, Justin, any advice on how to stay out of chop other than using a volatility indicator? Not a reliable method, to be quite honest with you. That is exactly what that volatility filter is designed to do. And if you have a good functioning volatility filter on you, your entrance into chopping markets will be quite low. Now, it is possible that depending on the market that you're looking at, you will have to adjust the sensitivity of your volatility indicator. So, for example, if you're trading a highly volatile asset relative to something like Bitcoin to USD, which, however volatile, is less volatile than some alt to Bitcoin pairs, where we can just see massive explosions in the course of 15 minutes. And again, that's kind of the allure and the charm of trading cryptocurrency is the tantalizing volatility. Traders go where volatility is, and there is massive volatility in this one. So I don't know a better reliable function. Again, I'm sure that there are other ways out there. But at the end of the day, I always have to take everything back to what is my premise when I approach trading, right? So I want to trade for the rest of my life over and over and over again in a consistent fashion. Okay. I'm totally willing. And there have been times where I have a losing month or I have a losing streak. It happens to everybody. I typically have a losing streak once a year. Sometimes multiple losing streaks in a year. But the reality is, if I want to be able to trade profitably and consistently over and over and over again, and also have time to spend with my family, and also have good, consistent results, a good data set, and then be able to teach that in a coherent, consistent fashion to other traders as well, because it does work for me and it works for all the students who join the group who take it seriously. The reality is you don't have, there's very few, how do I explain this well? Indicators as opposed to subjective analysis. So price action or trend lines or support and resistance or supply and demand or liquidations or any of those kind of concepts. All of those are subjective, right? So when you look at price action, people can interpret price action many, many different ways. An indicator, on the other hand, is either true or false. It's either it tells you to go or it doesn't tell you to go. And when you have a system like that, when you have trading signals like that are very clear and objective, it's either true or it's false. You either trade or you don't. There's no wiggle room. There's no room for interpretation. There's no, well, maybe if I put the stochastic RSI on the chart, maybe I'll see a different picture. Maybe I'll see more information. Maybe if I go to Twitter and I start listening to my favorite, CT traders on crypto Twitter, maybe I'll get an idea of future direction. All of that stuff ultimately is nonsense, and no serious professional trader looks at subjective information like that. Now, there are subjective traders out there. Obviously price action is very popular, but at the end of the day, the most successful traders objectify their system as much as possible and utilize that to the full extent that they can. They don't take they don't take other data that doesn't fit into their algorithm into account. So I don't really think, from my perspective, that there is a better, more objective method than using an indicator of volatility. Don Candon. Hello, Mr. Wise. What are your thoughts and overall opinions on electric cars? Do I own one by chance? I do not own an electric car. I have nothing against electric cars. I think most likely they are the way of the future. I don't think the technology's there, and I'm definitely not on the ban gas and oil right now because we're all going to die in 50 years train. Yeah, I guess I don't have too much of a nuanced opinion. I think people get really fanatical about them. And again, that's delving into the most controversial topic that we could ever talk about right now, which is most likely climate change. Anyways, talking about Bitcoin, of course. P.S. There's no chat visible on the screen. Yes, I actually removed that on purpose because, and again, looking for feedback from you guys. But again, most people are here to see the charts. Most people are here to see what's displayed. And although having the chat on the stream is kind of cool and unique, I guess I didn't really put it up there except for any other reason besides that's what I've seen other streamers do. So sometimes you have to look at what your assumptions are. Anyways, let's zoom in here a little bit and talk about Bitcoin. Again, as I said, very low volatility, very low price movement. And again, I'm hearing some things looking at concepts like open interest. Open interest is rising. Open interest was not rising on the way up. So on this big movement to the upside, nor was it rising on this big movement to the upside here. Relatively, it wasn't really a big movement, relative to what we've seen with Bitcoin. But for yesterday, it was a pretty big movement, very quickly. So it's a highly volatile movement in a short space of time, which got a lot of traders excited. And we talked about that yesterday. But looking at the open interest indicator, and actually, let me see if I can't pull it up. This isn't my area of speciality, but I was having a conversation with a few traders earlier this morning about this. Let's see here. No, that's not really the one I want. No, that's not really the one I want. That's not really the one I want either. So I can't find the one that I want. And we could go over to tensor charts, but excuse me. We'll just talk about the charts that were shared with me. And when you see open interest, so basically the theory here is that on this large movement to the upside, open interest was falling. And what several traders that I was talking to were deriving was that because open interest was falling and price was moving up with high volatility, that was shorters or individuals that held large short positions closing their position out. And now in low volatility, open interest is rising quite high. And their theory is that now they're placing on new shorts, or that new shorters are coming into the market. Therefore, and this is kind of where they make the jump. Therefore, what they're saying is that the next movement will be highly volatile and will be to the downside. The problem with that is that it's highly subjective. There's nothing wrong with that. I know using open interest can be an interesting indicator and potentially might find its way into your trading because there are certain components of the cryptocurrency markets where we actually have pretty good data on compared to other exchanges. Because we don't really have the filter of a broker. Everything's everything's ECN, everything's electronic communications network. There are no dealing desk cryptocurrency exchanges that actually take the opposite side of your trade. They are all PTP. They are all P2P. They are all connecting two separate orders in the book. And some exchanges don't do that, especially in Forex. You have dealing desk operations where when you submit a trade, you are trading against the exchange. You're trading against the broker. The broker simply takes the opposite side of your trade. So again, open interest is a volatility indicator. That's all it is. It's not, and as I say in the latest module on volatility, volatility indicators do not provide directional bias. They just do not provide directional bias consistently, because you have to take that volatility information. If you're only looking at volatility, you're looking at volatility information, and then you are attempting to ascribe a directional bias to that based on, in this case, price action analysis. So he was saying, well, because price moved up and open interest dropped, and because, now we're moving on low volatility and price is sideways, therefore price will move down. So that is applying price action analysis to determine directional bias, which again, price action analysis does not have a consistent method of determining directional bias. Momentum indicators do. And that is my personal approach to the markets, and that's what I teach people. Momentum indicators are what derive your directional bias, because again, they're either long or they're short. As we can see right now, the indicators in the short term, so in the midterm, are actually pointed up, but we are below our 30-period Donchian, meaning we are in bearish control territory. Can we see a stab up to the 30-period Donchian or above? Absolutely we can. And again, should we get an increase in volatility here, Bitcoin is one of those assets where I would consider taking a reversal trade below the baseline, with the first target of the baseline being my first target. We don't have that information right now. We have a falling explosion level. We do not have rising volatility in the market as we speak at the moment. CCI is above the zero line and MINX is above the noise line. So we are beginning to look a little bit more bullish. But again, we need to see a nice stab of volatility out of this market structure. And potentially you will be able to capture this movement better on the 1 hour time frame. But again, be careful that you are waiting for candles to close, because let's return to yesterday's candle when we saw this big move into the upside. A lot of individuals looking to market long this. They didn't wait until the candle closed. And if they would have just made a rule with themselves to always wait for the candle close, they would not have entered into this trade. And interestingly enough, our system absolutely told you that you would not want to be longing this whatsoever. MINX did not give you a cross up whatsoever. Thank you so much, Scrooge McDuck. Highly appreciated. Okay, so let's go look at the hourly chart for today, and let's actually see what we have going on. We have, again, on the daily, we're flat. There is no trade to be taken on the daily. Directionally, with the trend, you would be looking for shorts. We're going to need rising volatility to the downside and a MINX crossover, as well as a CCI crossover. So basically, at this point in time, we have fully reset our indicators, and we are looking for a re-stab down to initiate bearish momentum, where we can re-enter into a short. And again, as I said, the last time we took a short on Bitcoin, when we're in bearish territory, when the overall trend is to the downside, we are always looking for re-entry opportunities to the downside, regardless of what price action is saying, regardless of what crypto Twitter is saying, because that is the best logical setup. Now, obviously, even in this bearish control territory, as I said, with Bitcoin, should we get rising volatility at this point in time, I would take a reversal trade on Bitcoin to the upside. I won't be the last one out of the pack to do that, and that's okay if it's a losing trade. Again, we do have to take our opportunities, and when the volatility filter says go, we have the best opportunity possible. Again, we were able to take this trade to the downside. We were not trading in this range right here. We did not take this long, and finally, the trade that was finally postured on our table was this short, and we were allowed to get out at a very small loss on that. So Justin looks like he's sitting in the White House office. Dun, 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 Bitcoin. Yeah, I once won the election of the United States of America, but I turned it down because I didn't feel like it. Now, let's start going down through the lower time frames. Let's go to the very popular 4-hour time frame. On the 4-hour time frame, one could have grabbed a reversal long right here below the baseline. That would have put you in for this big movement, and you would have been out of the market on this candle right here. So pretty good profit on that 4-hour trade. But again, you would have had to sit through a lot of low volatility. Volatility has just died off on the 4-hour time frame. So you are looking for an indicator reset. MINX is below. You are above the baseline. So midterm here, you would be looking for long setups. So all you're looking for here is MINX to cross back up and rising volatility on the 1-hour time frame. Let's take a gander here. Had a couple opportunities for reversal longs. This was a very tight spread, but again, one could have easily garnered a TP1, maybe even a TP2 if one would have entered. Nah, you would have entered here and grabbed TP1. Let's see here. No opportunities for shorts at this point in time. On this candle close, you could be looking for a short with low risk. Again, we're on the 1 hour time frame, so we're looking for low risk anyways. So typically any trades on the 1 hour time frame, because they're going to be much more frequent trades, I'd be looking for around 1% risk. 2% max, but 1% is that nice, comfortable, and sometimes less than 1%. So if we go ahead and take that setup here, and by the way, I like these updates that TradingView did. I don't know if you guys noticed these, but they added these little boxes around so that you could more clearly see what you're trying to click on, which I think is pretty neat. So if we go ahead and look for the short position on Bitcoin right now, we would be looking for, I don't know if you guys can see those. I do want to switch that. I'm going to switch that over to the other side. Move scale to the left. There we go. Be looking for downside targets of 81.60, 81.12, and 80.63. So pretty much looking for around $150 movement right now. First target, it's only about $50, $60 away. And again, ATR on the 1 hour time frame it's about $48. So yeah, about $50 swings on our take profit. And again, nice stop loss above the baseline here, right around 82.77. Not a whole lot of risk, fairly tight. But that is the trade that I see. Zooming out a little bit more and looking at Bitcoin's price again. What have we really seen here? We have not yet seen. I mean, I guess this would be fairly subjective. This is a higher high right here. People are going to be looking at this most likely as, God, if I had to guess, I would say something like a head and shoulders pattern. Yeah, but just overall, Bitcoin continuing on, and it's wacky, waveable, inflatable, arm flailing tube man consolidation zone. So again, you're always looking, I think, what I'm looking for right now on the daily, what I'm looking for on the higher time frames is a movement to the downside. I am looking to reestablish that trade to the downside. I don't have the signal to take the trade yet, but I will once I get it. Now on the 4 hour time frame, so mid swing term trading, you'd be flat. There's no initiation signal here to do anything. And on the hourly, you would be looking for a low risk short, potentially on the close of this 1 hour candle. Let's see what happens. Lee says, how do you set a proper stop loss for a trade and know it's at the right level? Well, so there's no such thing as certainty in trading. You're never going to know 100% on anything. Every individual trade, and it doesn't matter how skilled of a trader you are. And this is, something that's really, really important for people to understand, because I've been doing this for a long time. I'm a consistently profitable trader. And I try to be quite humble about that. But that is the reality. I want to just be genuine with you guys about where I come from and the experience that I carry. And unfortunately, in trading, there is a lot of there's really no better word for it than con men. And I've exposed a bunch of scammers as well, and fake traders and all kinds of individuals like that. And I do my best to keep the space as clean as possible. And I try to call out bad actors wherever I see them, because this is a space and this is a profession and an occupation that I genuinely love. And I think that you have to call out, if you love what you do, and if you love your space, and if you love your people, I think you have to call out malfeasance and evil wherever you see it, because that's the only way that things get good. One of my favorite movies is Boondock Saints, and although this quote precedes Boondock Saints, evil flourishes when good men fail to act. And I think that's a lesson that can be carried forth into any part of your life. But again, I said all that to say that when setting a stop loss, or when setting a profit target, or even when entering into the market in a positional trade, you don't know. You're never going to know the outcome. And I don't know. And I've been doing this for a long time. Every time I click the button, I do not know whether it will be a winning or a losing trade. There is no amount of analysis that you can do. There is no magical indicator. There's no magical trading strategy that is going to let you know, like, yes, man, this is a winning trade. This is a no-brainer. It's 100% all in. And that's why if you come across anybody that talks like that, Anybody on crypto Twitter, anybody on Discord, anybody whatsoever. That is, you should probably run very, very quickly, because that is just not realistic. And I see that a lot. I see that a lot from scammers, and I see that a lot from people who are new to trading. Right. Sometimes somebody's not a scammer, but they're just not a very experienced trader. And maybe they've been trading crypto for a year or two and think they know things about things, and they're having a lot of success. But they have not. Maybe they've never traded in a market that was actively against them, or maybe they've never traded in a prolonged market where their strategy just didn't work. And that can do a lot of things to you. Like, I've seen, young traders come in and have amazing success and results, and then for quite a while, right? And they're just killing it. But they're not really doing things the right way. They're not managing their risk. They're not trading consistently. They're trading very subjectively, and then all of a sudden they enter into a losing streak. Or a prolonged losing streak where their strategy just does not work anymore. And what was happening before is just not working. And they generally end up blowing out their account, and they generally end up not trading anymore. And then typically, unfortunately, a lot of those people resort to scamming, unfortunately. And it's just sad. But I've just seen it over and over again. But the other thing is, I'd say a decent portion of those people do end up humbling themselves and realizing, okay, so risk management, position sizing, and consistency are important, and really are what allow you to trade for a lifetime as opposed to having a hot streak. So anybody can go up to the casino table and have a bunch of hot rolls. It can happen to anybody, man. That's the dream. That's why people go to casinos, man. Like, I'm gonna go to the casino with $100, come out with $5,000. Come on, baby. Woo! Anybody can do that. It can happen to anybody. And the best thing that could possibly happen to you when you walk into the casino is that you lose your shirt over and over and over again, because then it's drilled in your head like, oh, okay, the casino's here to take my money. But anyways, sorry. So the correct answer to your question, in my opinion, is not how do I know if my stop loss is correct? The better question I think you should ask is, how do I know that the stop losses that I consistently set have a higher probability of allowing me to have a successful outcome to this trade? Because that's what you're shooting for. You're not shooting for, it's impossible to shoot for, I am going to have such an optimized system that I'm never going to lose a trade. It's not going to happen, man. Nobody ever wins every trade. What you're looking for is, what strategy, what structure can I apply to my trading in the realm of my stop and target system that allows me to have a high probability of winning trades and a low probability of losing trades, and that is repeatable over time, is consistent. And that's stuff that that's exactly the approach that I take in the course. So if you haven't checked that out, I recommend that. And just stick around, man, because again, you'll see me apply the exact same stop and target system to every single trade over and over and over and over again, because my experience has shown that that is the correct approach for me. That often is a correct approach that works for other people who trade similar to the way that I do. ACDC says, nice office setup and the dark screen charts. Thank you, man. I do listen to feedback. Which other indicator in TradingView comes close to your minks? Love your show and watch it every day. Thanks. Let me think here. I don't really know. I mean, I don't really think there is one out there. I mean, Minx it's a momentum oscillator, so it is similar. It works similarly to things like stochastic RSI or MACD or Fisher transform. It's not either of those things. I think that it's better than all those things. But the Fisher transform is a really good indicator, and I've recommended that quite a bit. The MACD is a pretty good indicator. I think the MACD is a good place to start for a lot of people. I don't think that the MACD is where you want to stop in your search for a good indicator. But listen, the reality is that there are some really clutch indicators out there. There's some really, really killer indicators out there. You just got to do the searching, my friend. So Minx is going to be similar in function to a lot of hybrid indicators. So it can be utilized as a centered oscillator. It can also be utilized as a two-line indicator. So that's going to be very similar to, again, the stochastic RSI, but it's quite different than the stochastic RSI. It's going to be similar to Fisher transform, but different than Fisher transform. Hopefully you get the drift of what I'm saying here. But, you know, I wrote Minx. I wrote the algorithm for Minx with a lot of help from different people. But again, I just found the aspects of other indicators that I wanted, and I honestly did a lot of tweaking because my expertise when it comes to programming is not natural proficiency. It is painstaking experimentation over many, many years, bashing my head against a wall until I figure out tricks that allow me to solve a problem. And thankfully for you guys, I enjoy explaining that, so you guys can save a whole lot of time. What's up, Crypto Caveman? Good to see you, as well as Moonshine Fuel and Agency. He says, been using WADA and stochastics for the last couple weeks. In this range we've been in and done pretty well taking hourly signals. Do you think that's an okay oscillator to use with WADA? I don't think that I'm not a big fan of the stochastic. It kind of falls into my realm of not good indicators. But again, if you are able to utilize, I think there's better ones out there. So let me just say that. But if you're having decent success with the stochastic right now, then I don't want to tell you stop doing what you're doing. I want to tell you make sure that your strategy is consistent and that it is repeatable and systematic and is a systems trader approach. And if you're having decent results with it, then who am I to tell you that it's wrong? Who am I to tell you that? If you're having good results, then by all means, man, Godspeed. God bless. And I am actually pretty impressed by people who can utilize things like the RSI and stochastic and make money, because I think they're fairly terrible indicators. But again, if you are able to have good results with them, then who am I to tell you that you're wrong? Go forth and prosper, my friend. I think that you should continually, subjectively, not even subjectively, just from experience, I would say you will want to look to replace that indicator eventually. But if you haven't found the better indicator yet, then use what you have. Then use what you have, for sure, man, for sure. All right, let's see here, guys. Piggybacking off of this answer, do you always have a hard stop loss set? Is it different in different markets? I'm going to say 90% of the time when I trade daily time frame trades, I always have a hard stop loss set, because the hard stop loss is only there to protect me in a worst case scenario. So typically, because I trade a lot of leveraged futures, there unfortunately is the risk of whack-a-noodlery, and I have no other word for that. But you guys have seen it on Kraken, right? So imagine this, right? Imagine that you have 30% of your entire equity on an exchange, and you're using 3x leverage so that you can keep the other 2/3 of your funds in cold storage safely, right? Now, if you lose 30% of your account, 33%, 0.13, blah, 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 blah. Yeah, I get it. But if you have 1/3 of your equity on an exchange, if it gets wiped out, you can come back from that. That's a huge loss, but you can come back from that, as opposed to losing your entire stack. But again, that would be a terrible, terrible loss, and obviously something that we want to avoid. Naturally, nobody wants to lose 1/3 of their account, God forbid. So my thoughts would be, we've seen it on Kraken. We don't really see it on things like ByBit or BitMEX, but the risk is always there. Something can always overload the system, and we just don't know. And at the end of the day, once that trade gets executed, so it depends. This is why I trade on ByBit. And if you guys want to trade on ByBit as well, there is a link down in the description. From what I understand, that link will now give you an extra margin bonus as well. I believe it's $60 if you utilize that link, as opposed to just signing up at ByBit. But again, that's your own decision. Now with, so my point here is, all it takes is one long wick to trigger my liquidation price, right? There's no stop loss timeout. Like, price could wick. We could see a ridiculous scam wick that shoots price down to, 5,400, 4,400, or up to like 17,000, 18,000 instantaneously, and then comes back down to median price. And unfortunately, what that would do is trigger my liquidation. And that would, again, result in the loss of 30% of my account. So with that hard stop loss there, I'm protected from that. And that's really the main point. And you also have to look at the way that I trade. Like, the stop loss is not designed to be hit. I mean, my stop losses on trades are hit maybe 5 to 10% of the time that I have a losing trade. The rest of the time when I have a losing trade, almost all of my losers in dollar terms are small losses because I use early exit systems. So I don't wait for my stop loss to get hit to get out of a trade. And that is that is one of the first most basic concepts that I learned about trading is you cut your losers early. And that is what's so difficult for most people to do. The biggest barrier to most people that I tutor is they just don't want to they don't want to put a red mark on their trading journal. It doesn't even come into their head that you can get out now for $100 loss. No, they don't want to put a $100 loss on their trading journal, and so what they end up doing is putting a $1,000 loss on the trading journal. You just let that fucker go, man. Just let it go. It doesn't matter. You can have 9 losing trades and 1 winning trade and make money. You got to think of the dollars. You have to think of the probability. It's not, and this comes back to what I was saying earlier. The individual trade doesn't matter. Every single individual trade is pretty much a coin flip, man. But over time, you can affect the statistical results of a series of trades. You can't affect the statistical results of one individual trade. Basically a coin flip. But over time, with building a good strategy, you can have a higher probability of winning trades and a lower probability of losing trades. And that's what we do. That's the point of everything that we do here. So yeah. So generally almost always hard stop loss. There have been a few times where I don't use a hard stop loss, and I specifically point that out. For example, when I make a call in the group. Do I still believe we will go lower than the recent low of 7,700? I do. Speaking of tricks, can you say how you get text under the shape dot triangle down? So you're talking about V4 PineScript labeling, Dark Rico? Again, that not an expert, but I could help you out as much as I can. It's kind of lengthy. It's not, I don't want to say it's difficult, but it's not easy. At least it wasn't for me. Hey, Fifth Ronin, good to see you, my friend. Okay, it's 12:38, so let's go look at a few other assets. What we're doing here, we're going to come back here in about 20 minutes and look to see if we are going to take Bitcoin short on the hourly. Ethereum. We'll go look over it on BitMEX. Excuse me. And on the daily. Now, on the daily, Ethereum, as opposed to Bitcoin, so I did let my Bitcoin short go at a small loss. My Ethereum short, however, is still open because, again, the indicators look different over here on Ethereum. And as I said, pretty much for a while, Ethereum has been outperforming Bitcoin to the upside and to the downside. When Bitcoin moves down, Ethereum moves down quicker. When Bitcoin moves up, Ethereum moves up quicker. So FZ19 has been an interesting asset to trade as well based upon that. But the dollar pair as well. So still holding my daily short open for Ethereum USD, still looking for those lower downside targets. So essentially, because I am hedged on Bitcoin right now, so I do actively have a short position open. But if price goes down, I won't make money. I just won't lose money. I'll maintain my dollar value. So I am hedged on Bitcoin. Why? Because we're below the baseline. Always hedged when we're below the baseline. And if we do take a reversal long, it won't be for all of our equity. It will be for a small portion of our equity. Or the correct portion of our equity that the system calls for. Again, we have a position sizing calculator as well that we follow consistently every single trade, and that's another big secret sauce right there. But yeah, everything here is quite negative on Ethereum on the daily, and nothing has quite changed. Full justification for full risk shorts at this point in time. On the hourly time frame, we would have had this candle right here at 1300 UTC time would have given us a full risk short signal. We would have already, so just like a ninja, we would have stabbed down about 1.32%. And let's take a gander. I'm certain that we would have gotten, yep, TP1 and no, not TP2. Let's go look at the data window and actually see what TP2 would have been. 170.87 and low of, yeah, so the low on this candle was 171. Would not have hit it. Would not have hit a TP2, but we would have hit TP1. We did reverse, and on this wick, we'd be out at break even. So already a successful trade on Ethereum today. And now we're just waiting. Nothing to do as we sit right now for Ethereum. We would be looking for continuation shorts, of course, being below the baseline, or we'd be looking for a break back above 174.25 to start looking for longs. But we still do have a little bit of rising volatility here, which is good, which is attractive to see. All right, let's take a gander at, let's go look at our BitMEX pairs. And we'll look at XRP BTC. Now, XRP BTC, we are flat on XRP BTC. We did trade XRP to the upside over here and ended up letting our position go. Hold on. So here we are on the daily. My bad. We did take XRP to the upside lately and then let our position go flat on XRP BTC. But again, we are still in bullish territory. So if we do get a continuation long, I will be taking that trade to the upside. And all I need to see for a continuation long at this point is for Minx to cross over the noise line. But as we sit right now, flat, ended up having a nice profitable trade on XRP, 2 of 3 TPs, and then exited in profit. Not a break even stop loss on that one. So pretty good. Cardano is, again, just in quite a tight range right here. No justifications for taking longs at this point in time. Absolutely flat on ADA, and I don't see a reason to be looking for a trade. You know, honestly, we are trying to break above the baseline right here, but none of our indicators are bullish. So if we do end up closing back down, I'd still be looking for shorts on Cardano and looking for a pretty heavy movement to the downside. EOS, on the other hand, is looking better. EOS is looking a little bit better. We don't have anything to justify a trade at this point in time. Interestingly enough, we did end up closing below the baseline here. So our indicators have had a full reset. So as soon as we can get our indicators back in sync, we can be looking for longs on EOS. But as it sits right now, flat. Same for TRX. TRX is in bullish territory, very similar with XRP. There is a lot of shilling of TRX going on right now. I don't see the justification for a trade. Again, just following the PTP system, you would have had an entry over here on the open of the candle of the 30th of September, and you would have caught this entire movement to the upside and out on this candle. So you don't grab the breadth of the movement, but you grab damn near most of it. And good trade. And then again, nothing to do right now. BCH Z19 did give a long signal yesterday on high volatility, having a little bit of a pullback today. We'll see how the daily closes, see if we exit this trade basically at break even, or if we do get a little bit of more bullish reversal and continue to take this to the upside. Litecoin, as I said, was signaling a short trade on yesterday's daily candle close. We are looking to break down out of the bottom of this range, according to the indicators. I am long on Litecoin from a fundamental perspective. It's one of my favorite coins. I like buying Litecoin. I've gone over the analysis before. The Binance chart does not do this trade justice. So let's look at the Bitfinex trade. So nothing has changed fundamentally on this. We'll go look at the Bitfinex chart. But again, this price level right here, and again, I do trade demand areas upon occasion, because supply and demand is a real factor in cryptocurrency. When we come down, we've come down to this level once, twice, 3, 4, 5, 6, 7, 8, 9, 10 times and put in 100% correction to the upside. On only one occasion did we actually make a pronounced stab and trend below this price level, which is over here toward the end of 2016, leading up to the 2017 bullish run-up. So when you see that pattern, I mean, that is just amazing R to R. So I'm going to take that trade and hold on to Litecoin in a much looser fashion than I typically would. I do have a soft stop loss set for this area. It's pretty wide. It's a pretty wide stop. So price is going to have to put in quite a bearish trend for me to change my fundamental concepts about Litecoin. But again, I think Litecoin is a no-brainer demand buy at this point in time. And again, from a fundamental perspective, that is my trading thesis on Litecoin. Moving over to Don Candon says, I don't want to pause the show, but I also want to watch the new Terminator trailer. Let's watch it together. What did I miss regarding Craig? Nothing. We haven't talked about it yet, my friend. Doc. We got a request for Doc. Justin, you have to say, I'll be back when about to take a break. Zerp. Link we did not miss. But Justin's son. We will look at Link and Doc. Let's look at Link. We don't have a lot of data over here, but I'd like to look at the Link USD on Coinbase. Link is actually looking pretty good on the USD pair. We do have a continuation signal on today's daily close. We never closed below the baseline. The first signal to trade Link would have come over here on the 1st of October, allowing you to capture this entire movement and exiting on this candle right here. And then basically flat on this area, looking for continuation and a second wave up on Link actually. So this is actually pretty positive to see. Looking at the BTC pair, let's see, same thing. Yep, on today's daily close. Now, again, we are driving up into an area of supply. This would be our 1, 2, 3, third test. One thing that I would be prone, that I would be a little prone to see is, again, we're trading spot markets, so it's not exactly like futures, but again, you still kind of see that same behavior. If we come up here above, what's the high of this candle? 35,897. So if we stab above that and then reject, I typically don't like to see that. I'd be pretty prone to cut the trade on the first red candle following that. But again, I think you do want to take the chance for the breakout trade here preemptively, because typically sometimes with cryptocurrency, you don't really get a chance to take breakouts like you would regular assets, because they just break and then moon mission. Doesn't always happen, but yeah, Link looks quite good, man. And again, we might have a nice continuation trade on this. So we'll see. And then Doc. Let's see if Doc is ready to rock, baby. I talked about Doc yesterday, and Doc is actually one of those... just one second. Sorry, I talked about Doc. I just had to check a message. I talked about Doc yesterday. And again, I think that Doc looks pretty good, man. Doc's been in a nice bullish trend. Doc's one of my favorite coins to trade. Let me put it that way. It's not a highly liquid coin that I trade all the time. But what I really mean is that almost every trade that I've had on Doc has been successful. So I'm a little biased to like to take Doc when I get a good signal on it, because my system has a high probability, or has had very good success with Doc. I can't talk about too much about what's going on in the group, but we are actively interested in Doc at this point in time. I think that it looks quite good. It's holding this level quite good. It is above the baseline. And we've had a nice baseline reset, because of course this wick is going to throw off something like the Kijun. Because the Kijun is being generated off, the Donchian is being generated off high and low price and then averaging that out. So anytime you have an outlier wick like that, you are going to be resetting your indicators. But again, I think Doc looks quite good. I think the altcoins still look quite good. I think that I am still overall looking actively for opportunities in altcoins. They're volatile, so they're going to pull back, but a lot of them are in established bullish trends, and we haven't seen a bullish trend flip. And we continue to see BTC dominance continue to taper off and be in its downtrend. BTC dominance is not bullish at all right now. So, okay, that's Doc and that's Link. Both of them look quite good. There's not an active signal on Doc today. You're still in an entry area. You're still in an entry zone. You're within the trade qualifying line. Everything is bullish. All your indicators are bullish. You have rising volatility. The trade is there. We have about 10 minutes left. Excuse me. We have about 10 minutes left. So let's go look at... let's go look at the FX markets. Let's see here. Aussie yen. We are waiting for a reset on the Aussie yen. And of course, I wasn't looking to take I wasn't looking to take CAD trades today, and I wasn't looking to take pound trades because, of course, the Parliament was voting on Brexit today. Actually have not seen the outcome of that yet. Let's see here. Nope. Excuse me. Don't see anything from October 22nd yet. Here we go. Okay. So yesterday they blocked the vote. Okay, I didn't see this. You guys over, I know I got a lot of people watching from the UK. So you guys let me know what's going on over there. Across the pond, please. Can I increase my position size on DOC? I'm at negative 2.20% right now. I don't like increasing my position size on losing positions. I prefer to wait until, if I do increase position sizes, I typically look to take the funds from losing trades and apply those into trades that are signaling continuation longs that I'm still actively in, or discretionary position sizing signals. Sounds like we're being stitched up again. Yeah. Okay, so moving on. But anyways, that's I just showing you guys the news calendar that I was using, and I don't live in the UK, so I apologize for not knowing everything that is exactly going on. But again, I wasn't looking for CAD because core retail sales were coming in today, and then the Brexit. Okay, I do see that it is tentative. Okay, tentative. But other than that, we have home sales, and we had CB. You know, we had public sector. None of this stuff I was too interested in. Let's see here. So I was staying away from pound and CAD trades. So let's get back over here. Aussie yen, nothing there. Aussie Kiwi. I'm actually going to be, if we can get some rising volatility, I'd be looking for Aussie Kiwi shorts at this point in time. Similar for the Aussie CAD, I'd actually be looking for the Aussie CAD's the Aussie CAD's been good to me. You know, I've had some pretty good winning trades with the Aussie CAD. Short of this area right here. Long and took profit on this first because I was taking a reversal trade up to the baseline. But again, as I said, I wasn't actively looking for CAD trades yesterday, and we're in a very no trade situation as we're posturing on today's daily candle. Aussie dollar, I do have a winning trade on. As you can see, I've already taken profit off TP1. I have my stop loss at break even on the Aussie dollar trade. So really nothing to do right here. Canadian Swissy, you know, we don't have rising volatility. That's the last little bit of the puzzle. We did end up resetting over here, so nothing to do. The Canadian yen also looking for a reset. The Swiss yen also looking for a reset. The Euro Aussie also looking for a reset. The Euro CAD also looking for a reset. The Euro Swissy actively looking for a continuation trade. I don't have it on the table right now. The Euro Kiwi, this actually looks like a good setup for a reversal baseline bounce. Euro Pound, which I'm staying away from trading right now at this point in time, but does look like it wants to start stabbing back up to the baseline. At the same time, I do not like these high wicks to the upside. So probably the Euro Pound with Brexit going on is probably the best foreign currency pair to absolutely stay away from. There's just too much risk. Euro dollar as well. I'm not really hot to trade right now for the same reason, interestingly enough. But again, it's also in a clear indicator reset area as well. Pound Kiwi, taking profit on longs is what you'd want to be doing at this point in time. And again, we're going to skip over pound pairs because we're not actively trading pound pairs at this point in time. Kiwi dollar did signal a very juicy, nice long over here. Nothing to do at this point in time. Kiwi CAD, long signal would have come in on the Kiwi CAD yesterday. Of course, as I said, I wasn't looking for CAD trades. Trade would have ended up going in my favor, but again, always reducing risk in that aspect. Kiwi Swissy, as we can see right here, did give a long signal yesterday as well. Kiwi Yen, I have a winning trade in on. I've already taken a little bit of profit. My stop loss is a break even. Dollar Canadian is continuing to descend to the downside. So again, I don't really see, and this is why I didn't put on a lot of positions yesterday. I don't really see a lot of good entries right now on the foreign currency markets. Got to kind of wait a little bit. Here we have the dollar Swissy trade that I've had on for a while, and it's kind of gone back and forth on me. This one is, I'm in a little bit of drawdown on the dollar Swissy right now, but again, I don't see any reason to exit my trade at the moment, so I'll hold that one open. Dollar Yen looking for a reset as well. Aussie Swissy as well. I did enter the Aussie Swissy yesterday. Trade is going nicely in my favor. And the dollar yuan is in a no trade zone for me. So unfortunately, not a whole lot of excitement in the FX markets looking for positions to enter into, but I just don't see a lot. And unfortunately, I was really sick and down and not actively trading Forex when I got kind of the last wave of good FX entries. So it might be a week or so before things kind of calm down and we get some new trending entries to the upside, because largely this wave, if you did not catch them, has been missed, and we are running out of momentum to the upside currently. So again, looking for some pullbacks on most of these pairs, and looking to reset and take trades to the upside. The crooks are voting shortly, my friend. Jim Spen from Facebook says, ZERP has to die to restore balance to the universe. 0x BTC and Sierra Coin asks to Google Sierra Coin solar power. That kind of sounds like... It kind of sounds like self-promotion there, my friend. Let's go to, let's check out ZRX BTC. Has been a pretty good mover right now. 0x BTC, you would have actually, if we take a gander at Minx here, as I've said many times, Minx has a fantastic ability to typically give you, well, I guess it didn't. I was thinking it was this candle. 0x would have had you out of the market right now, would still have you out of the market. There's no active trade on 0x right now. You are in profit-taking mode for this last long wave right here. Would have been the entry on 0x. You would have been sideways for about 4 days, and then you catch the movement to the upside, and then you exit on this candle. So nice, let's see here. About 20% movement on 0x right there. Looking for continuation to the upside, but I wouldn't be surprised to see a stab down here to about 3240 to retest the baseline, see if this level does hold. If we do kind of zoom back out from a more, from a supply and demand type level, or from a typical support and resistance level, we can see that we did break over some pretty steep resistance, or at least the resistance that had us in this accumulation zone right here, when we did break above 2947, around 3000 sats. So even though our Donchian is coming in at 3240, wouldn't be surprised to see a stab back down into that level to retest that area. Or conversely, because again, if we look at something like VPVR, we are at a chunkier level of, we were basically at the same level. And as we can see, we did spend a little time here. And trading was mostly unattractive, and you waited for the next wave for entry. So that's basically where we're at right here. I basically either see price moving sideways on 0x, and then we get a nice movement to the upside and we get continuation, in which case we take that trade, or I see price kind of dipping back down and retesting the last breakout level before kind of getting the gumption to come back up and test this level again. But again, bullish, but not an active trade at this point in time. Stotac, thank you so much for the sub over there on YouTube, my good friend. And it is coming up on 1 o'clock, guys, so we're going to take a quick break now. 1 moment, guys. All right, 1 second. but the one little duck with the feather on his back. He traded Bitcoin with the quack, quack, quack. Sorry, guys, just looking for something here. That's about all I got. Anyways, guys, we're going to take a quick break. We're going to take a quick break, guys. When we return, we've got so much to break down for you. We're going to be talking about Wright. We're going to be talking about XRP and its potential moon mission or death and collapse. We're also going to be talking about Circle. We're going to be talking about the squeeze of basically the options from American traders. And we're also going to be talking about some recent comments from FinCEN regarding cryptocurrency innovation. So we'll break that all down, as well as more markets and your user submitted chart requests. Don't go anywhere, guys. Go do some calisthenics while you wait. We'll be back in just a couple of minutes. Thank you so much. And welcome back, guys, to the show. Thank you so much for sticking in there. We've got a fantastic second hour for you guys. So much to talk about. Let me know if you guys got any questions. He says, let's see here. Oh, yeah. Where are the... Sorry, I had to pull back up in the live chat. Hurry back. We already missed you. Thank you so much. Suggestion for the show, change the fan's lighting mode to changing color without cycling. Yeah, I do switch that up, about once a week. I don't have the remote control on me at this point in time. It's over on the other side of the room. Hey, it's hard. Good to see you, my friend. What do I think leverage trading has done to Bitcoin with many people shorting it? Does this make people join the bearish side? No, I don't think so. I think it just provides more opportunities to trade and provides more liquidity. I think it's a good thing. If we couldn't short Bitcoin by this point in time, I would be concerned. And it allows individuals to accumulate more Bitcoin on the way down, because if you hold a short position open on Bitcoin when Bitcoin's price is bearish, which with any asset that is subject to market volatility and supply and demand, will move up and move down. And, holding a short position open, especially on an inverse futures contract, pays out in Bitcoin. So you are actively accumulating more Bitcoin and you are taking it from non-believers, because if you are shorting Bitcoin, then by the time you close your short out, you will have more Bitcoin, i.e. and more dollars. You'll be rewarded if you properly shorted Bitcoin. And then ideally, when Bitcoin's price goes back up, now with your more Bitcoin, now you are increasing in your dollar value in totality. So you are actively taking away. So successful short sellers are actively taking away Bitcoin from weak hands, and strong hands are accumulating more and more Bitcoin. And strong hands are the ones that are going to be utilizing Bitcoin and be rewarded for their market services by distributing those coins through purchasing goods and services, as market vendors are more akin to accept Bitcoin, especially as it increases in user friendliness, especially as it increases in value, and especially as individuals see the absolute necessity of a digital decentralized currency. Thoughts on Zuckerberg's testimony about Libra today? I did not watch it, so I do not have any opinions. I apologize. Okay, with that being said, one thing that I did look at today that I do want to talk about, and to do this, let's head over into the newsroom, is FinCEN's latest comment on cryptocurrency development. All right, so here we are. Brought to you by CoinDesk, which, unlike in Russia, is not outlawed here in America. So the nation's, for those of you who've been living under a rock, FinCEN is the nation's top AML regulator. And they warned the crypto industry that startups must comply, and by startups I mean anyone that wants to do an IEO or any cryptocurrency startup, that they must comply with financial regulation or face the wrath of authorities. Now, let's see here. Now, Kenneth Blanco is the director of the Financial Crimes Enforcement Network, which is what FinCEN is short for. He warned the industry on Monday that they must follow the rules according to the Bank Secrecy Act and other AML regulations when setting up their businesses, and that his agency will be vigilant in its enforcement. So more of a direct stab and threat. Well, why did you do that? More of a direct warning, more of a foreboding warning than anything we've really gotten before. And he made these comments while he was speaking at Georgetown University as part of DC FinTech Week, which just sounds like the most absolutely fantastic, fun thing I could ever attend. And he told the moderator, who was Chris Brummer, by the way, if you guys know him, that companies have no excuse for not following the law. He says, quote, "What we tell everybody is if you're going to innovate, you better make sure that you're complying with your regulations prior to executing that innovation or prior to going to market," Blanco said. "You better make sure that happens because, frankly, you don't get to build it and then everybody comes around over it." Not sure what he means by that, but quote, "You have to make sure that you comply with the law first and then you can execute and get to market. Otherwise, that's not happening. I'll tell you, if you can't comply with your BSA, you're going to have a problem. You must comply, and we as a regulator, as the primary regulator and the administrator of the BSA, we will make sure that you do, and you're going to have a hard time if you don't." So pretty much a direct threat against cryptocurrencies that tend to try and get around all of the malfeasance and the issues with the modern banking system in the first place. He says, now, he did clarify on their position that they will not be accepting any excuses along the lines of, quote, "cannot be done," or, quote, "technical challenges prevented compliance with the law" either. He said any firms which do not believe they are able to fulfill the requirements in following the Bank Secrecy Act should not come to market or even be pursuing the development of the technology in the first place. So let me put that into simpler terms. He's like, look, bro, if you trying to make billions off of this new cryptocurrency innovation, you're going to have to do it our way and kick that money right on up to the regulators through the Bank Secrecy Act so we can maintain our monopoly on the financial markets. Because again, if anybody's going to be making billions around here, it's going to be me. It's exactly the point of regulation. Regulation, as I've said many times before, does not protect people. Very, very rarely does it ever help or protect anybody out. All it does is after the fact, after corruption and malfeasance has already happened, which they should have been proactively, that's what they should be doing. They should be actively seeking out bad actors in the space and utilizing their efforts to take specific action against bad actors instead of making wide-ranging regulation that only puts them in a position of enforcement and central authority, because authority corrupts. It just does. It just does. Centralized authority, especially over financial markets, corrupts authority, and regulators are no different. It is just a tool for control. So now his comments obviously come at a time in the industry when we are expecting, honestly, incoming enforcement action to be taken under the guise of anti-money laundering, with recent joint statements being published by FinCEN, the SEC, and the CFTC. We already know that this is going to be their plan of attack. The standard plan of attack is terrorism and child pornography, and that's always what the government waves in our face to take away liberties and tell us why we need them to come in with their sweeping regulation and reduce our opportunities. Give you an example of overextensive regulation. Precious metal trading in the United States. You have access to one-to-one leverage. That is ridiculous. And that basically means that as a retail trader, there is very little opportunity in the precious metals game. Now, obviously, there are legal ways to get around that and trade with more leverage, because you can trade from outside of the United States as a United States citizen. But again, I'll leave that up to you to decide. But what that basically does is it puts all the leveraging opportunities in the hands of the same institutions who, through their over-leveraging in the first place, were the ones who caused the financial crisis, because the regulators were more concerned about stopping retail traders from making money and less with stopping institutional investors with throwing the entire economy into a goddamn death spiral. Just to give you guys another insight into the incentives and motivations of regulation. It is not to stop institutions from bad acting. It is to stop retail traders from making money and upsetting the system. And also, God forbid, from anybody developing disruptive technology or payment methods that circumvent the traditional banking structure. Now, stern warnings aside, Blanco did praise the idea of innovation, but he continually warned of dire national security risks associated with this technology. Well, good. He said, some of it is really exciting. The good is, wow, we can really protect society in many different ways or enjoy more job growth based on these ideas of inventions and ideas. On the other hand, it's scary how some of these same new tools can be used by bad actors. Right. Bad actors, just as well as good actors, will use new technology. That is the point. Bank robbers started using cars when cars were developed to get away from the robbery faster. Murderers started using guns when they were invented because they're more effective at killing people. But again, you do not outlaw the tool. You specifically act against bad actors, and you do not enforce. You do not make regulation. You do not make wide sweeping regulation that reduces liberty and increases the centralized authority of the state. Now, according to him, the Bank Secrecy Act was inspired by a need to counter these malicious actors, right? You guys started realizing that, oh, wow, we are centralizing financial control in the hands of banks. We better come up with some regulation to stop banks from doing malfeasant acts. Maybe the better solution is decentralizing the power of the banks and creating something like a decentralized currency. That's just a crazy idea, man. Society wants to protect the elderly and other vulnerable groups susceptible to cyber fraud and other digital crimes. So let's replace cyber fraud and other digital crimes with collateralized debt obligations and default swaps. Okay, so let's just go back to 2008, 2009. Who were the people that lost the most? Wasn't the banks. It was the elderly and those who relied on their pensions. And Social Security is a little bit of a different story, but it's unfunded liability. But pensions were the ones that lost tons of money on the bets of the banks and funds that were managing, on the backs of the investment banks that were managing all of these pension funds. They're the ones who lost out. They didn't get refunded. The banks got bailed out, not the pension funds. Regulators never protect people from malfeasance, ever. They always wait until retail traders or retail investors or regular folk get absolutely fleeced, and then they step in and make regulation that is bollocks and doesn't do anything. He said, FinCEN is not anti-technology. No, it's just pro-statism. The agency is technology neutral. Right. And despite his warnings to the industry, he believes that tech should continue advancing, though he reiterated it should be developed responsibly. Right? You guys are allowed to innovate in the box that we say you can innovate in. And again, that has never been how society has pushed forward, as we talked about yesterday. Yeah, it would be nice. I guess it would be nice if society, tested these concepts and ideas and new technologies out and new ways of doing things or societal structures or introducing technology or child rearing. It would be nice if we tested these things and had fully a good grasp over a couple hundred years of how this would impact society. But hey, man, we've got a short lifespan and we're just charging forward. Let's go. And that's just how it is. Blanco concluded, innovation must be responsible and it must be reasonable. You can't just build a car that only goes 190 miles an hour and say, change the speed limit. It's not going to work that way. Your car is going to have to adapt. Otherwise, it's not coming on the road, bottom line, and that's the message. Or we have innovations in tech, and now we have self-driving cars, and we want to go 190 miles an hour because that's cool now. And so, yeah, change the fucking speed limit. Just an idea, man. So let me know what you guys think. Am I being unfair to the FinCEN chief? Is he right? Is there some regulation that's there to protect us, or is it just all an absolute control mechanism and scheme? But while you guys are thinking about that, let's talk about our favorite coin on this channel. It's XRP time. It's XRP time. Sorry, hold on. Live footage of oh shoot, we're not on that scene. Maybe I can just a second. Let's see here. Here we go. Let me just preface this. I have live footage of XRP investors after I finish with this story. So while the XRP digital token is among the most hyped assets on social media, with an active community, millions of coins given away, and regular partnership announcements, XRP, unfortunately, price-wise, is still stuck beneath 30 cents today. Now, XRP did reach a peak of $3.65 at the top of the late 2017 crypto boom before starting its deep bleed out, as with most other digital assets, losing more than 90% of its value, a fate similar to other top altcoins in the space. Now, at time of peak, so at the peak of XRP hype, at the peak of the altcoin boom in 2017, investors' impressions, so XRP investors' impressions, were that the token would gain mass adoption and easily climb to $5 before heading to $500, where its market cap would overtake Bitcoin and take the throne as king of crypto. So again, I don't know how many of you guys are newer to the space or how many of you were around back in 2017 or early 2018, but again, all you have to do is go back in time and look through Twitter, and you can see that all the huge altcoin shillers on crypto Twitter, or go back on YouTube, look at all these price predictions, man. They're all I don't want to, all the big heads, right? All the big heads. They're saying, massive wild predictions for all the top altcoins at the absolute peak of the 2017 market. And again, fundamentally, when other people are yelling, you should be selling. When people are screaming that we're going to go all the way. Now, 2 years later, unfortunately, XRP is among the worst performers of 2019, failing to recover any significant ground, topping around 47 cents in July, and it has since resumed sliding to the downside ever since. With the sentiment on XRP being way down, and some arguing now that it will never break above $1 again, meaning there are a lot of investors who bought in around the $2 to $3 area who are absolutely out in the cold. So I want to look at this is an article, and these are just, again, these are not my opinions that I'm going to be referencing here. I'm going to be using my own kind of analysis and my take on this. But these are some opinions from this journalist on why XRP won't ever see $1 again. And again, this isn't meant to be necessarily, again, never a stab at XRP investors. I never want to call anybody out for investing in something that they believe in. You guys are not bad people. I'm not trying to attack the XRP community. I understand you guys are passionate about what you believe in, but these are just some logical arguments that I would like you guys to respond to or give me your thoughts and opinions on. So 1, XRP will never recover against BTC. Now, XRP is currently right around 3,000 Satoshis, and it's down from a peak above 19,000 Satoshis. Now, it is highly improbable, according to this journalist, that enough people would sell BTC to buy XRP. Its price rarely moves in line with new announcements, while Bitcoin attracts significantly more investors over the same time period. Again, while we've seen XRP not rally in a significant fashion against its all-time highs or toward its all-time highs, we have seen Bitcoin basically climb up almost all the way to its all-time high, topped out right below 14,000. And Bitcoin has established itself, obviously, as the market leader, with its value proposition clearer every single day, while Ripple's fundamentals do not seem to be inspiring sufficient investor excitement. Again, I've made this argument myself before. I don't see the token economics in holding the Ripple token. I see the token economics in investing in Ripple, the company, because they are developing great things. And if they ever went public, I would probably buy R3 or Ripple stock. But unfortunately, the actual token itself to be used to be utilized as intrabank settlement seems like it would be a better value proposition as something closer to a stable coin, which would require the Ripple company holding something similar to Libra, either a basket of fiat currencies or an alternative basket of commodities or securities or something that would allow them to hold the value of XRP, or they'd have to peg its price, in which case, once its price is pegged, anybody that bought underneath the peg price can sell, which would affect the market, and anybody that bought above is screwed because it's pegged forevermore. Selling pressure. The Ripple company constantly unlocks XRP from its escrow and brings it to market on a monthly basis. Now, while these sales do happen in the OTC markets and not necessarily slipping onto the open markets that we would trade on as investors, it still remains the fact that there's a lot of XRP tokens floating around with many, many giveaways to banks, companies, or individuals. In fact, we had the somewhat jokingly, I can't remember what it was called, like continue the dumping campaign in response to crypto bitlords stop the dumping campaign, which said, what did they say, man? What did they say? They said, spam the adoption or spam the liquidity or something like that. I can't remember what it was. Now, the stash of co-founders of XRP, such as Jed McCaleb and others from Ripple, are selling almost constantly as it's unlocked to them. Right, so founders are entitled to their divvy, and they are selling pretty much as soon as they gain access to it. This leads many to describe the situation as simply oversupply. There's just too much supply relative to demand, and the asset is simply not scarce enough to significantly appreciate in price. Now, according to Ripple's data, directly from Ripple, 220 monthly installments of 227.3 million XRP tokens are still due to be released and sold by Ripple on the OTC markets. Number 3, not a robust enough use case or use cases. Ripple has been careful about disclosing the facts around the real necessity behind the XRP token itself. And as I've said many times, when we're so here's the thing, and this is to everybody who's investing in altcoins, and I've said this many, many times before. There is only when you are investing in an altcoin, when you are investing in a cryptocurrency token, it doesn't matter whether it's Bitcoin,